Ryan, let's start with you. You've been bullish, staunchly so, since late 2022. As we see this choppy period in the market, we have a 5% pullback. Obvious questions about whether, in fact, it's the start of something more. How are you playing it?
Yeah, Mike, thank you for having me back. And TGIF, everybody. So, listen, after a 5-month rally, right, after a 27% rally, the 100 days off that late October low, we've been saying for about a month now, be open to the idea of some type of indigestion. Well, we're getting it, right? We're getting these late-day sell-offs. It's the first 5% correction, Mike, we've had all year. Just remember, most years on average have multiple 5% corrections. But here's just something for the listeners to think about.
For sure.
Look at the number of stocks making a 20-day low. We had a big spike in that recently, Mike. Also, if you look at the last 5 days, we've actually had some internal improvement. I know you wouldn't look at just the indices, but just today, like you just had a guest talk about the banks, right? There are actually more stocks kind of participating, even though you don't see it the last 5 days. So we think we're trying to flush out a significant low. We don't see a 10% correction. I think it'll be less than that, but that's kind of how we see things, Mike. We're getting close, we think.
So close in terms of time, maybe in price. Although I did think that some of the factors you were leaning on in terms of, seasonal patterns in election years, seasonal patterns after a really strong first quarter, suggested things could stay a little bit dicey for a couple of months.
You're right. I don't know if dicey is the right word, but I think just consolidate. Look at your average election year, Mike. You tend to have some weakness, a little bit of weakness, choppiness into Memorial Day. Then you have a surprise summer rally most election years. We think that could play out. Put-to-call ratios are finally starting to spike. The VIX is up around 20. VIX is in backwardation in the futures market. A little geeky there, but last time we saw that was March of last year. We are, let's see, the NAAIM finally starting to see some worry. We can go on, but this doesn't mean the low's here. I want to be very clear, but it means we're in the neighborhood, right? And those are the things you want to see. As everybody was a bull this time a month ago, I think this is perfectly normal and a refresh. It's really healthy, we think.
Yeah, that's true. A lot of the things a pullback is supposed to do have therefore been kind of accomplished. How are you thinking about the moves in the bond market at this point? Obviously, it's a pressure point on stocks. Do you think that the yields have kind of made whatever increase they're going to for a little while?
We do. We've been underweight duration for a while. When everyone was saying 6 or 7 cuts, we were always saying probably 2 or 3 because we thought the economy was a lot stronger. Now we think that pendulum, Mike, has shifted a little too far. In the portfolios, the models we run for our Carson advisors and our Carson partners, we actually added treasuries recently for the first time, at least since I've been there, and in 2 years. So I'm not saying we're huge bond bulls, but we do think, there's still probably a cut or two coming, and this talk of no cuts or hikes, we think it's extreme the other way, and then yields probably will start to work the way lower, and it's going to take some good inflation data. We get it, but we're still optimistic we're going to see that here.
And then real quick, Ryan, if you think the economy is stronger, we're seeing a lot of the big growth names really unwind here to the downside. Do you think that makes sense? Is that the kind of rotation you would expect, or are we going to be back to the old leadership soon?
No, we're not too surprised by that. We've been neutral technology for a while. Like a lot of people, this rotation, this idea of all these leaders moving to some other areas, we think it makes a lot of sense. And honestly, I know small caps and mid caps have struggled. We fully get that. But again, we think that if you start from right now to the end of the year, Mike, we think those are be some of the opportunities along with industrials and financials, these cyclical areas. We think rotation out of tech into those areas, that's how we're positioning our models.
All right, Ryan, good perspective. Appreciate the time today. Thank you.
Thank you.